Hello everyone, this is Professor Kent. Today's recording is chapter 3 and we're going to be dealing with chapter 3 homework. We're going to try to do as many questions and this will help you with your midterm exam and with the final exam and any activities that you'll be doing in chapter 3. The first question that this is at the back of the chapter is AP33A. And what they want you to do is think for each of the following accounts. These are the accounts. From identify the type of account and state whether it's a temporary account and a permanent account. What is the difference between a temporary account and a permanent account? Temporary accounts are the accounts that they close. Temporary accounts, we close them at the end of the period. We close them. Which accounts that do we close? We close them. We close all the revenue accounts. We close all the expense accounts, and we close all the dividend declared accounts. So dividend declared is closed at the end of the year. So those are temporary accounts. And permanent, how do we make them? How do we close it? By making them zero. So we're making them zero at the end. And next one we have is a permanent accounts. Permanent accounts are permanent. We don't close them. If we don't close them, whatever is the ending balance of 1 year becomes the beginning of next year. So what are some of the accounts? Any account that's sitting under asset will be a permanent account. Any liabilities account and any shareholders equity account, they're all permanent account. We do not close them. They are permanent account. So that's the definition of permanent account and a temporary account. So let's go through the question and see if we can pinpoint if it's an asset account, liability, equity, or it is a dividend declared account. So accumulated depreciation is a depreciation that is accumulating, and it's on a building, and it is a contra account, which we have a C. It's a contra account, and then it is my permanent. Interest payable is my liability account. If it's a liability, and it is a permanent. Then we have to go to common shares. Common share is my shareholders equity account, and it is also permanent. Deferred revenue that somebody paid us in advance. Our revenue is being deferred, means we owe them a service, and it is a liability. If it's a liability, it's a permanent account. Cost of goods that we sold. Cost of goods is an expense account. If it's an expense account, it is a temporary account. Sales revenue, it is a revenue account. If it's a revenue account, it is going to be closed, and it's a temporary account. Dividend declared goes in the dividend declared, and it is my temporary. Interest revenue, it is my revenue account, and it is my temporary. Prepaid expense is an asset we paid in advance, and that is my permanent account. Depreciation expense account is an expense. If it's an expense, it goes on my income statement, and it will be my temporary account. So that's the first one. So let's go to my next one, and the next question, let's see what the question is asking you to do. And it says prepare the journal entry for each the above transaction and adjusting entry. Adjusting entries are done at the end of the year. So first we're going to do normal entries, and then we're going to do adjusting entries. So I'm going to try to do it at the side. We started a business on January 1st, and we wanted to do a year-end entry. So that's what you're going to do. So first, before we do that, we have to do normal transactions. So we have it as we are going to say transaction number 1, and what we have to do at the top, we have a debit, and at the top we also have a credit. Transaction 1, we needed to know what we are doing with it. Equipment that cost 200 was purchased. When did we purchase it? On February 1st. So your first transaction is on February 1st for 50,000 cash plus a 2-year 4% note with the principal of 150. What did we get? We got equipment. So equipment is an asset. If it's an asset, it increase. If it's an increase, it will be my debit. So that's what's going to be. And how do we do? If you indent it, means it's a credit, so it's a cash. We paid them $50,000. Then what we have is we signed a note. If it's a note, it will be notes payable, or you can also call it long-term notes. But they told us it is a note, and we're going to pay them 4% interest, and that is my 150,000. The interest portion, we will worry about it later on, because at this point we just got the equipment. We are going to go to transaction number 2. That is, there's no date. We are going to do transaction 2. During the year, inventory costing 160 was purchased on account. What did we got? We got an inventory. Inventory will increase, and if it's an increase, it is going to be a debit. And then we didn't pay for it, so my liability also increased, and that is your accounts payable, and that is a credit of 160,000. So if you indent it, it is automatically known as a credit, but this is also, it goes under the credit. Now number 3, transaction number 3, what happened? We purchased on March 31st, so we needed to pay attention to the dates. So what we bought it? We bought an insurance policy for 1 year. So, and the insurance is expiring on 2024. So we bought insurance in advance. If you bought it in advance, you could call it prepaid insurance or a prepaid expense. So I will debit my prepaid insurance. We paid purchased, and then if they don't tell you anything on credit, then we take it as a cash, and that is 2,700. We need to pay attention to the dates. So these are the dates. That's when it'll help us do the adjusting entry. My number 4, sales to the total customers was 285. 65 was cash sales. So we have a cash sales, and some are on credit sales. So accounts receivable, so we have 2. In this case, 65,000 is cash, and my total sales are 285, and that is my sales revenue, and it's indented. If it's indented, it will be sitting as a credit, 285, and the rest is my accounts receivable. So I will take my 285, I will minus 65,000, leftover will be my accounts receivable, and that is my 220,000. I go to next one is my 5, payment to the supplier for the inventory. We're just making a payment. We purchased it before. I will have to debit my accounts payable because our liability is going down, and my cash account also going down, and that is $80,000. Then going next, we collected from customer. That's number 6. You collected on account. How much we collected? 180,000. Debit will be my cash, and that is 180,000 we collected from a customer, and that is my accounts receivable. $180,000. Going further, they said on January 30th, so we needed to pay attention to the dates. Paid 150,000 advance, and that will be delivered later on. So what we did is customer paid us. If somebody paid us, cash is coming in. How much is coming in? 15,000, and we call it a deferred revenue. Means we owe them a service. That's a deferred revenue, and that is my 15,000. Next is my number 8. 8 was saying that wages total of 60,000 was paid. It was paid to the customer. And how much was paid? And it was 10,000. Debit will be my wages expense, and it's a paid. Credit will be my cash. It's indented, so that's my credit, and that the amount is $60,000. Then we go to my 9. It is says now the board of director declared a dividend on 10,000. If declared, we know that we want to know if it's paid or not. If this one is not paid till January 2025, we're doing these transactions in December 31st. I will have to debit the dividend declared, and credit will be dividend payable. Again, today I am having some issue with my pen. Dividend declared and dividend payable. The amount here is $10,000. Going to number 10. Now this becomes the adjusting entry. So these are my adjusting entry. We need to adjust at the end of the year. And what is my adjusting entry on the 10th? A physical count of the inventory revealed that the inventory that we have it on hand is 40,000. We want to know how much of the inventory we had. So I do a physical count of my inventory at the end of the year. So they told us they were on hold. We have 40,000 left. So if this is what left, and how much inventory we had on transaction 2, we purchased 160,000. We need a balance of 40,000. That means 120,000 of the inventory was used or sold to the customer. So what we had to do is debit will be your cost of goods sold. I shouldn't do short cost of goods sold, and that will be my debit. Credit will be my inventory. How much is going to be? $120,000. So that is my adjusting entry. Now they said that it is determined that 30% of the goods that were paid in advance in item 7 had been delivered. So we go to 7, and 30% is we provided them the service. So how much is going to be? 115,000 multiply by the 30%, which is your 4,500. So now it becomes your earned revenue. So I will debit my deferred revenue, and credit will be your sales revenue. And that is my 4,500. Going further, they said that record the insurance expense for the year. So what happens is we had a prepaid insurance, and we purchased this prepaid insurance. We needed to know we purchased on March 31st. My year end is December 31st, so we needed to do an entry on December 31st and for the insurance. So this insurance, the insurance was 2,700. It was a 1-year policy, and 9 months are gone by. How do we get the 9 months? March 31st we purchased it, March 31st to December 31st. We have April, May, June, July, August, September, October, November, and December. So 1, 2, 3, 4, 5, 6, 7, 8, and 9. So there is 9 months. So that's how we got the 9s. Debit will be my insurance expense. Credit will be my insurance, prepaid insurance. and the amount here is, it will be 2025. Now let's go further. We have equipment. We purchase an equipment. When did we purchase? On February 1st, and the useful life is 20 and residual value is 50,000. So we purchase an item one, we purchase an equipment. The cost of the equipment was 200,000. So they told us the cost is 200,000. My residual value, they told us in the question, is 50,000 divided by the life, which is 20 year, and that will give me a depreciation for the year, and then I multiply by 11/12 because we purchased on February 1st. We are gonna, I have to get my calculator, so say that 150 divided by 20, so that is my 7,500. I multiply by the 11 divided by 12, and that is 6875. So my debit will be my depreciation expense. We did do this when we did our chapter 2, but we're repeating that because we are recognizing the transactions in this accumulator depreciation, and that is for that is for 6085, and that is, sorry, that one is a debit 6085. My accumulator depreciation will be credit of 6875. So this will be 6875. So let's go to the next one. It says record the interest expense for the notes payable for the year. So my notes payable was, I did the notes payable when we did it. We did a notes payable in the first transaction on February 1st. Our note was 150,000 and we pay them 4% interest, and it is for the 11 months. So I will debit my interest expense. Credit will be my interest payable. And how much is going to be? 150,000 we borrowed. Our interest is 4%. 11 months are gone by. I will get 5,500. So interest expense is 5,500, and my interest payable will be a credit of 5,500. We left with one more transaction now, and it is for the wages. Is in addition to wages that was paid during the year, 6,000 was remain unpaid, means we haven't paid some of the customers, some of our employees. If it's not paid, debit will be wages expense, credit will be my wages payable. And that will be for the $6,000. So that's what we're gonna do. So this was the question 6A, and we also did two more questions in the class. And what we're gonna do is we're gonna do 3.7a. Let's do 3.7a. We did this in the class, but I'm going to do it again because if you missed it, you could go through this question again. So when are we doing? This is our first year. These are the transactions. So let's see if we could do our transactions. So I'm going to try. In this case, this is my first transaction. It is transaction number 1. We issued common shares for cash. Cash is my debit, and that is my 200,000. And what did we issued? Common shares. And that is my credit. So at the top we are going to have a debit, at the right side we have a credit. So this account, when you indent it, it is automatically known as a credit. I'm going to do my second transaction. We purchase an inventory on account. we got inventory is my debit of 475000, and we paid it on credit. If it's on credit, it's an accounts payable, and that is 475. My third one is we sold an inventory. We sold it for 640,000 and it is on account, and we sold, and if it's sold on account, we are going to be receiving money later on. Debit will be my accounts receivable and credit will be my sales revenue, and that is my credit. The amount is 64,000 and this is my 64,000. My number in the three, we have two transactions, and then you're gonna have a cost of goods sold. So we are gonna debit my cost of goods sold, and credit will be my inventory, because if you sold this inventory the customer, it worth $380,000. So we bought it for 380,000 and we sold it for 640,000. So we're making a lot of money. So then going to number 4. Number 4 said that we pay collected 580. If we collected, my cash is going up by 580,000, and from on account. So then we paid on account. That means a customer is making a payment, accounts receivable. And that is my 580,000. Paid 430 of the supplies to the inventory that we purchased previously. All we're doing is we're making a payment for the account that we owe, and that debit will be my accounts payable and credit will be my cash, and the amount is 430,000. So it's a debit to accounts payable and then to your cash account, because it is a credit, and that will be your credit. Going to my number 6, they said that we bought delivery vehicle for 36,000 cash. What did we get? We got the vehicle, and what we did, we paid cash. Cash will be indented. In this case, the cost of the vehicle was $36,000. So we debit the vehicle and credit the cash, and at this point we bought the vehicle for 36,000. So I will debit the 36,000 here. We credit the cash for 36,000 because we paid cash. Going further, I'm just gonna move that. I read a little room here. So let's do the next transaction. Next transaction is number 7. Number 7 is paid 26 rent, including my 2,000 for the next year. If 2,000 is for the next year, my debit will be my prepaid rent, and that is your $2,000. My current year's rent is rent expense, and that is my 24,000, and we paid them cash and indent the cash account, and that is a credit of $26,000. Going further, we incurred operating expenses and was paid 18,000 was paid. The other one we haven't paid. So my total expenses that we had was 8. So my first one is for my operating expenses, and my operating expense will be a debit, and operating expense was $20,000. We paid cash, and cash will be my indent. Again, your entry has to balance. Your debit has to equal to your credits, and credit will be my accounts payable, and accounts payable is your $2,000. And going further, and we have a 9, we have 9 and 10. They said we record the depreciation expense on the vehicle. If you're recording a depreciation expense, debit will be my depreciation expense, and that will be for $2,000, and my credit will be my accumulated depreciation, and that is accumulated depreciation. That is a contra account to your building account, and that is my depreciation, and that is also for $2,000. So let's do the last one, and then we will finish all the transaction. We declared the dividend, we declared it and paid the 6,000. When you do that, my debit will be my dividend declared, and credit is my cash, and it's a $6,000, and this is my 6,000 here. So that's the first thing, was to journalize the transaction. The second thing is we needed to post them. Once we post them, we needed to we need to do is we needed to create a trial balance. When you're doing a when you're doing a posting them, what we need to do is we needed to post them in the T account. So we're going to create some account. So I'm going to create some of them. I have a cash. I know that we have accounts receivable, and we have receivable, and we know we have a prepaid rent. The ones you remember that you use it. If you don't have an account, you're going to create it. So I'm just going with it. We have an inventory. You have an asset account first, then the liability, and then we have something called vehicles, and under the vehicles we have accumulated depreciation. So we call it accumulated depreciation account. We also had a prepaid. We already did prepaid. My liability, we have accounts payable, and then we have accounts payable. We also have a notes payable. We have, after notes payable, we have common shares. We have a cost of goods sold. I promise I will be updating my screen. I supposed to do it after my class, but then I got so busy I didn't get around to doing it. So that's why it's just giving me a little problem for some reason. I don't know. When the internet's a little bit slow, because I'm working with a Microsoft whiteboard, and that it gives me a problem. So we have a common shares. I'm trying to make a line and my screen is not coming back. So we have a common shares. So let's do our common shares. We also have a revenue account. We also have dividend revenue expense account. We have operating expenses. We also had depreciation expense. And then we had dividend declares. If we needed an account before anymore, we could create it. We have a rent expense, and we have something called dividend declared. So when you do that, to make your life easier, you could do a tick mark to post it. So this is my transaction 1, and that is your 200,000. And then we have a common shares, and I'm going to put the common shares 200,000, and that is my number 1. So My inventory is 475000, and then we have accounts payable 475000. I'm gonna see if I could 47500. Sometimes this creates a problem. Maybe I should close it and then open it one more time to see if I could this solves the problem. I'm so sorry. Sometimes it just creates a problem, my whiteboard. So again, if you are doing it, you continue posting it while my screen is coming back. So my pen is back 47500. So that's I posted it to the accounts payable. Then we go to accounts receivable. That's your 64,000. We have sales revenue of 64,000 and 64,000. For some reason, I am having a internet problem, so that's number 2. But if I sign out, it's going to delete everything that I have done, and I already done 30 minutes of my video, so I'm just going to continue doing what we're doing. And then we have we don't have a cost of goods sold account, so I needed to create a cost of goods sold, and once you create it, it is my debit, and that is 380,000. Then I have done that. My inventory account has 380,000. Credit, we done that. My cash has a debit of 580,000, and we are okay with it. And then receivable is 580,000. We have done those two. Accounts payable is a debit. If it's a debit, I need to put it on the debit side. So 430,000. We paid cash 430,000, and that is done. We bought a vehicle for 36,000. It was 36,000, and we paid cash. So debit is 36,000, and credit will be my cash for 36,000. So I'm just going to do it here. I'm not going to try to erase it. We have done my prepaid rent is 2,000. My rent expense is my 2,400. I'm going to go to my rent expense. It's at the bottom. You see it. That's 24,000. And then we have a cash of 26,000. So we paid that. So let's go further. We also have operating expenses of $20,000. We paid cash for 18, so I put 18 here, and then 2,000 will be my accounts payable. So that'll be 2,000. So we have done these ones. Then we have a depreciation expense, and my depreciation expense is 2,000 here. My accumulated is 2,000. We done that, and we have a dividend declared, and the amount of dividend declared was 6,000, and we paid cash 6,000. 6,000. So we done that. So you can always put the number beside it, which transaction is it, to make it easy. So you're going to add up all your debits, you're going to add up all your credits. So wherever the higher number is, you're going to balance will be 2,6,400 here. So you're going to add the debits, you're going to add up all your credits, and then once you do that, you are going to have a debit balance of 264. My inventory, I will have a debit balance of 95,000. I'm circling it. The reason you need to circle it, because you're going to only take the circle number to your trial balance. So that's my credit, and that's my debit, and I have in my accounts receivable. I have 640,000 and I had a credit. It will give me a debit balance of 60,000 and I circled it. And when you do this one, when you have a balance, I'm going to have a credit balance of 47,000. And then going further, my common share, oh, we don't have any notes payable. I thought we did. So we have a retained earning is service revenue was 64,000. My common shares was 200,000, and then my cost of goods sold is your 380,000. My operating expenses are 20,000. This is my 2,000, and this is my 24,000, and this is my 6,000. The reason I'm circling it to make easy what I may have to try to do, I have to put it in the balance in my trial balance. So first thing to do journal entry, second thing to post them to the ledger account, which is a T account. Now what we are ready to do the trial balance. When you do the trial balance, what you have to do is you have to charge it to the cups. This is a sweet dream chocolate limited, so this is the name of the company. And what are we trying to do? We are trying to do a trial balance. When you do a trial balance, when are we doing it? On December 31st 2024, 31st 2024, whatever the balance from these T accounts that we're going to do. First one is my cash, and we have a debit balance and we have a credit balance. That is your 264000, and that is my debit, and we have my credit. So my next one is my accounts receivable, and the accounts receivable, there is a number for accounts receivable is my $60,000. I have a prepaid rent, and that is my prepaid rent, and that is my $2,000. Then we go to my inventory. My inventory is a debit balance of 95,000. I have my vehicle, it has a debit balance of 36,000, and I have accumulated depreciation, that is the credit balance. If it's a credit balance, I need to put it under the credit column. So this is my credit column, and that is your $2,000. We have accounts payable. Accounts payable is a credit balance of 47,000, and we have costs of goods sold, which is 380,000. We have common share, it is a credit of 200,000. So all I'm doing is taking it from the T accounts and putting it in my trial balance. And then we have a revenue. Revenue is a credit, and that is 640,000. So I will put 640,000. My pen is not doing what it's supposed to do. So we have operating expenses, and my operating expenses was 20,000. That's why I'm trying to say the numbers. And we have a depreciation expense, it has a debit balance, and that name of the account is a depreciation expense, and that is your 2,000. We have a rent expense, and my rent expense is 24,000. Rent expense is my 24,000. And we have a dividend declared, and that is dividend declare is $6,000. So when you do that, we add up all your debits, and what we're going to do is we are going to credit, add up all your debits and credits, and then you're going to get a balance. And the balance that you're looking for is 889000, and that's what we got in when we were in the classroom. I'm just trying to put it in the last one so that it makes easy for me to put it on, and then that way I don't have to repeat anything. I'm just going to write it with my finger, and it is my dividend, and the dividend value of your dividend is $6,000. And then what you're going to do is you're going to add up all your debit side, and the balance of your debit side will be 889000. And then what we're going to do is you needed to put it on see what the same balance at the other side, so your debit and credits are equal. And my apologies for my screen to be like this, and I promise normally it is not the case like that. I don't know what this seems to be the problem. Could be that I need a new battery for that. So these were the questions we did. We also did one more question, and I do wanted to do that question. So when you add up all your debits and credits, you will have that balance. So, and that's what the balance we got when we did the question. There. So hopefully, oh, there it is, 889000. So what I did is I took out the batteries and putting the new batteries in. Now what I wanted to do is I also wanted to do the closing entry. Again, the closing entries were one of your questions, will be one of your questions in the when in your will be one of the questions. So when you do the questions, we wanted to do 1310. It asking you to do the closing entry. Why do we need to do a closing entry? So we can start with the new year. So we close our revenue account, we close our income summary, expense account when we close our income summary, and then we close our dividend, and we needed to do the balance at the end. So that's what we needed to do. So the first one is I'm going to credit, my revenues are credit. If they're credit, I'm going to close them. In other words, how do I close it? While making them zero. So my debit will be your sales revenue account, and that is your 488. That's the balance. Then you have an interest revenue, that's my second account, and that balance is my 2000. So we wanted to close them so we could have a start with a new a new year. So we will credit your income summary, and income summary will be a credit of both of these, that which is 490,000. So 490,000. That's my first entry. My second entry is to close all the expense account, and these are the list of all the expense. You have to list them, and what we do is we debit the income summary, and the total will be whatever the expenses total will be. First one is your cost of goods sold, and the balance in my cost of goods sold is 316,000. Then what we have is your wages expense. My wages expenses are $70,000. So that's my wages expense, which is your 70,000. 70,000. Then we have we have my rent expense, and rent expense, in order to close it, we needed to credit, and that's my 26,000. And then we go to my depreciation expense, and that is my 43,000. If I add all of them together, I will get a balance of 455,000 if I add all these four numbers together. My third entry is to close my income summary. Income summary is just a temporary account. It is only there to close my closing entries. So I have a credit balance from my first entry. I have a debit balance from my second entry. We want to know what is the balance in this account. The balance in this account is 35,000. And it is a credit balance. In order for me to close this account, I will have to debit the income summary, and the income summary, and that is my 35,000. In other words, I wanted to put a net income. Net income will increase your retained earnings, and that's what I'm trying to do, is to retained earnings, and that is a credit balance. We have to put a credit through, and that is my retained earnings. Just be patient with me so that I can finish this, and then I can sort out my pen issue, and I promise you the next video will not be like that. Earnings, and that is 35,000. My fourth entry to close the dividend declared account, and dividend declared normal balance is a debit balance. In order for me to close it, I needed to credit it. How much is that? They told us my dividend declare was 18,000, and I will have to credit the 18,000. I will have to debit my retained earning. So these are the 4 journal entries you have to do for the closing entries. Now they also told us determine the closing balance in the retained earning. So when you do a retained earning, so what do we do? In the retained earning, we started off with the 70,000, and that was a credit balance. So from these transactions, we credited the 35,000. We post this to the debit. Here was 18,000. The balance in your retained earning count will be, if you do the debit here, that's my 18,000. So I add up all my credits and I add up all my debits. I can only do it if my 18,000. So then if I add up those two numbers, it's going to give you 105, and then my debit is 18,000, and then I have a balance of 87,000. So that's what the question is asking you. What is my balance in my retained earnings account? So the retained earnings account has a balance of 87,000. My apologies for not having the pen to work. I do not have a battery at this point, but I promise you that I will get a new battery, and then the next video will be perfect. Thank you so much for listening to me, and don't forget to subscribe to my channel. Take care and bye for now.